Ladies and gentlemen, let me welcome you to the Slovak University of Technology in Bratislava. I am pleased that the Institute of Management is a co-organizer of the prestigious International Action Industry Seminar together with the European Real Estate Society. The Slovak University of Technology in Bratislava is the best technical university in Slovakia. It is a modern research and higher education institution. It continues in the development of the legacy of the 250-year-old mining academy in Banská Štiavnica, where the foundation of vocational and practical learning was established. At the international level, our university has participated in hundreds of collaboration agreements with foreign universities, faculties, and research institutes. Every year, almost 500 students are sent abroad for study stays to participate in student exchange programs. The university graduates are among the most desirable and best paid employees in the Slovak labor market. Almost 20,000 students attend its faculties and the Institute of Management every year. The university offers 3 types of degrees: bachelor, master, and doctoral. At present, the Slovak University of Technology in Bratislava consists of 7 faculties and the Institute of Management as the University Institute. Ladies and gentlemen, the topic of this industry seminar is a macroeconomic and real estate overview of the Central and East Europe region, including Slovakia, Session 1, and Sustainable Development Factors and Barriers in the Real Estate Market, Session 2. I would like to especially welcome Professor Ingrid Napi, the President of European Real Estate Society, and the representatives of the European Real Estate Society Board. And now to our keynote speaker, Mr. Kevin Turpin, the Regional Director of the Research from Colliers International, and who is also a moderator for the first session. Also Mrs. Hanna Ovesna, who is the Executive Director of the Slovak Green Building Council. She is a moderator for the second session. I am glad that our guests from business area accepted our invitation, our panelists, as well as all participants of this prominent event. The Institute of Management was established in February 2008 as a university-wide institute, and its director was Professor Ivanička, who was also a member of the European Real Estate Society Board. One of the departments of the Institute of Management is the Department of Real Estate Engineering, which followed the activity of the Department of Economics and Management of Building and Industry from the Faculty of Civil Engineering. For more than 20 years, the researchers led by Professor Ivanička focused on scientific activities into the fields of economics, investment, and management of the real estate market. After he passed away, we are continuing in his successful work in the research and education area of real estate. A large part of successful doctoral graduates focused in their studies on the real estate market research in various fields. An important activity of this department, our Department of Real Estate Engineering, was to prepare and realize the bachelor, master, and doctoral study program in the Slovak and English language. However, at the same time, we are trying together with my colleagues to prepare a study program in area real estate investment and management with foreign universities. Ladies and gentlemen, I would like to thank to our partners, Colliers International and Slovak Green Building Council, who participate in this prestigious international event. I hope you all will have a great time in online Bratislava and enjoy our industry seminar. Thank you.
I guess it's my turn. Hello, everyone. My name is Ingrid Nappi. I am the new president of the European Real Estate Society for this incoming year. I'm currently a professor of management and real estate studies at ESSEC Business School in Paris, where I hold both the chair of real estate and sustainability development and the chair of workplace management. I'm happy to be with you today for this ERES Industry Seminar. And I thank very much the Institute of Management of the Slovak University of Technology in Bratislava, Colliers International, and the Slovak Green Council for organizing this seminar. As you know, the added value of our industry seminar is to deal first of all about European real estate issues, but also on a transdisciplinary perspective. That means that we try every time to mix professionals and academics who come from finance, management, real estate, or urban studies department point of views. This is important, moreover, today in Corona times. So we will have today a very interesting seminar with this transdisciplinary overview of the global and local risks that are or might impact the real estate business in Corona times. I'm sure you will take advantages of this time to get some insights and share some ideas. Now let's begin. I'd like to move on very briefly and present to you the European Real Estate Organization, its events and commitments. I will let you read the slides, and because of time, I'm going to give you a quick overview. So, what is European Real Estate Society? ERES is a European non-profit organization which was launched in 1994. And since then, we have been fostering relationships with the real estate industry by promoting a strong network, working with national and pan-European societies of property researchers and organizations such as you can read, GIF, Vogon, EPRA, INREV, and RICS. Next slide, please. So what are our objectives? The main one is to develop research and education in real estate in Europe while promoting this strong link between the academic world and the real estate industry. So how? By providing and providing opportunities to meet, next slide please, by providing an opportunity to meet and work during the many events we organize, by encouraging the participation of young researchers, and by linking ERES to the world through active participation with the Mother International Real Estate Society, and by developing relationships with other global members and the sister societies, such as the American, African, Asian societies. So what do we do? As you can see here on this slide, no, previous one, please. So, as you can see on this slide, all the main events we have launched since the creation of the society. The main one is, of course, the annual 3-day conference, where on average, more than 320 papers are presented each year, and also seminars. But also the benefits from the members include access to our journal, to the virtual library. Next slide, please. Here you have the list of all the annual conferences which have taken place since 1994 in different European countries and nice cities, with 2019 being the last one where people could attend in person. Unfortunately, this year's conference was cancelled, and we all hope to see each other in person for the next one next year in Karlsruhe. Here, next slide, please. So there we have. Here is a list of the industry seminar, including today's one. And I'm very happy to do this presentation today. And next slide, please. Lastly, the education seminars, which take place at the end of each year. And because the next one will be organized with the Mother Society, International Real Estate Society, on an international basis, we have decided to hold it online. Next slide, please. So, as I mentioned, our goal is to foster relationships between the academics and professional communities, providing support, encouragement to PhD students, offering them events and activities such as those listed on the slide. And move on, please. And here you will see the sample cover of the latest journal, which is available to all our members. Please, next one, please. Please, yes, please take a look on our website, where you will find what I've spoken about today and much more. So last slide, please. Thank you again for your participation in this event. Please enjoy, and I hope to see you in person at the next conference or seminars. Enjoy your day.
Okay, my turn. So yeah, thank you, Professor Nappi, and thank you to my colleagues at Colliers, to ERES, and the Slovak University of Technology there in Bratislava. So just for the next sort of 15 minutes or so, I'd just like to give you a quick rundown of what we've been seeing in the real estate markets in Central Europe and where Slovakia fits into the context of that. You know, obviously at the beginning of this year, I went on a small tour of the region. And actually this presentation is very similar to the one I was doing, but obviously there's a few things that have happened since. The uncharted territory title actually was coming more from the fact that we were in a very long real estate cycle, almost a 10-year cycle that we'd never really seen previously. Nowadays we're, you know, certainly at the end of that cycle, but you know, we're in very, very different times that we, you know, couldn't have possibly foreseen at the beginning of this year. So just flicking on to the next page, hopefully. I seem to just take, there we go. Oh, Grace, can you put that back? So there we go. Hopefully I can move it now. Doesn't seem to want to move. Okay, so again, at the beginning of the year, you know, some of the things that we were talking about, you know, is what's in the headlines, what is impacting on real estate markets. Now, you know, unfortunately, you know, the big elephant in the room, which is, you know, slap bang in the middle of the screen there, is obviously COVID. You know, this came along, and you know, and to a large extent, you know, we've seen, you know, day to day, we don't seem to sort of talk about anything else really. You know, it is rather dominating, you know, for obvious reasons. But at the same time, you know, life does go on, and there's also, you know, lots of other things that, you know, that take place, you know, that influence the decisions we make around our lives, but also around real estate. So of course, you know, there's a lot going on in the political sphere right now. There's elections, you know, some have gone well, some have not gone so well. You know, people are demonstrating in the streets. You know, this is causing a lot of unrest, you know, and there's, you know, it's probably at an unprecedented level that we've seen before. Economies and cycles, you know, we just briefly mentioned about that, but again, economies are being massively impacted by COVID, and we'll talk about that a little bit more. Brexit, you know, we didn't hear anything other than Brexit for quite a long time. I'm pleased to say that that sort of disappeared a little bit, but it's still there, and that's still going to happen. And again, similarly, trade and tech wars are also still happening behind the scenes, and they will also have you know, quite a significant impact on business in Europe and for Central Europe as well. Sovereign risk and security, again, you know, this is more really about partly also accentuated by COVID. Governments might sort of go back into sort of a more protectionist, more nationalistic stance as some of their sort of bigger, more valuable assets come under threat. Another one, a big sort of theme of this particular day is around environmental and social governance, wellness, and a number of things related particularly to energy, and we'll talk about that shortly. Data and tech, you know, we've got panelists here who will talk about that today, and how data and technology is both enabling and disrupting the real estate industry. Construction costs and labor markets, we'll talk about those, but again, we've coming out of a period where we had very limited labor pools. We were starting to struggle to find labor, particularly in the industrial logistics and office sectors. And partly as a result of that, construction costs from a labor perspective, but also a material perspective, have been driving upwards up to at least 25% than in previous years. Again, growth of online sales, we've seen that particularly accelerated by COVID, but again, it wasn't a particularly new phenomenon. This was already happening, over the last few years, and then again, that is specifically made changes in the retail and industrial and logistics sector, along with all the supply chain and fulfillment that comes along with that. And again, our panelists will touch on some of these. In Central Europe, we have a very large exposure to the automotive industry, Slovakia in particular. We have over 10 of the world's largest automotive producers in the region, and all the thousands of parts suppliers that go along with them. And again, that industry as a whole, we'll talk about that shortly, but that industry as a whole is having some pressures, but again, a lot of these are not new. And coming into the real estate sector, we look at pressures on rents, either positively or negatively, depending on which sector we're talking about. We've got new sectors coming through in the alternative sector, residential for rent, for example, student housing, and a number of other things, along with others like flex space and co-working. Otherwise, some of the other things that are in the headlines are the shortage and availability of housing, at least affordable housing, which is also not helped by shortages of land and some of the challenges around permitting. If you can go to the next slide, thank you. So, looking at COVID, again, as I'm sure you're all very acutely aware, we're pretty much now largely into a second phase. Unfortunately, in this part of the region, you can see there that the Czech Republic, Slovakia, Hungary, and Poland, all are pretty much at the top of the scale in terms of the second wave and the repeating number of cases. Now, of course, you can look at this data a number of ways, but ultimately, what we're saying here is that compared to the first wave, the countries at the top of the scale there are experiencing multiple times what they'd seen in the first wave, and this is also adjusted to testing. So, some of the Western Europeans, particularly the Nordics, seem to be handling things better, but nonetheless, everybody seems to be getting a second wave, and we'll see how that materializes. Next slide, please. So looking at economies, sorry, beg your pardon. So looking at the economy, if we can just go back on, there you go. This year is pretty much going to be a bit of a write-off. In brief, all countries will decline, somewhere, on average between sort of 5 to 10%. Central Europe is not immune, of course. Certainly differently to the global economic or global financial crisis back in 2008, 2009. One thing I would say is that the CEE economies are heavily connected to their main trading partners, particularly Germany and France, the UK, for example. But certainly they are more diverse than they were back then. So again, I think the resilience is likely to be slightly better, and the rebound again, therefore, should again be reasonably rapid once COVID sort of seems to be phasing out. So if we go into the next slide, again, looking ahead for the next sort of 2 to 3 years. Sorry, it seems to be a delay. We both seem to be doing it. So looking ahead to the next 2 to 3 years, the rebound should be reasonably strong based on Oxford Economics forecasts. But again, there's a number of things that that can happen between now and then, and a lot of it seems to be revolving around finding a vaccine for COVID, amongst other things. Okay, just looking at investment flows. I mean, obviously, the real estate sector, you know, there's multiple areas of interest from development, from occupational standpoint, but ultimately, a lot of these properties are traded, and you know, so far this year we're actually 12% down in terms of investment volumes across the main CEE markets, with Poland and the Czech Republic taking the largest share of that. Our forecast at the moment suggests that we could be, you know, in terms of investment volumes, could be down anywhere between 20 to 30% year on year. Again, this is not due to the lack of investor interest. This is really more to do with the fact that you know, in some markets there's a lack of product available, and COVID is basically, you know, is restricting travel from multiple parts of the world. So investors like to obviously physically see and inspect properties before they buy them. Similarly with, you know, with the letting markets, and if they can't do that, then their decision making tends to be restricted. In terms of what people are investing in, offices generally have remained sort of the most invested asset class. Historically, it was retail, but obviously retail is as we know, is one of the hardest hit sectors, along with hotels. So we've seen a significant drop in investment volumes in those two asset classes. Industrial and logistics, which is really the theme of what we're talking about today, has grown significantly over the last few years in terms of investor interest, and even more so today. In fact, if you ask any investor today what his main focus will be for the next year or so, and ongoing, it will be industrial and logistics. The main drawback, as Martin on the panel will testify to, I mean, his company Prologis, along with 2 or 3 other major players, global players in the market, control probably a good 2/3 of all industrial and logistics stock, and are long-term holders, investors with their partners. So very rarely does do large volumes of industrial and logistics properties come up for sale. Alternative sectors, residential, for example, there was one very large transaction last year, the beginning of this year, but typically these are rather much smaller. Okay, in terms of pricing, I mean, just to keep this short, you know, there has been some price movements. The colourful dots are the current position. The black lines are where we were at the global financial crisis. We don't necessarily see prices moving back that far, but overall we've seen about 25 basis point movements for offices, about 50 basis point movement for retail shopping centres, and industrial have largely remained stable or even improved. And again, real estate remains a very compelling investment class, mainly because, again, if you look at some of the alternatives of keeping your money in the bank or investing into more, so let's say, risk-averse bonds, which are basically, both of those options are really returning close to zero. Again, as I said, there is billions of euros or billions of dollars in dry powder or unplaced capital currently globally. It's all trying to find a home, and you know, there is currently a lot of frustrated capital out there that wants to find a home. So again, so moving on to the industrial and logistics market in the region. Recently, Colliers, we produced a report called Exceeding Borders, and we covered the 17 markets that you're seeing here in Central and Eastern Europe. So if you get an opportunity, have a look, you'll find that report on the internet. Essentially, you know, the logistics market in Central Europe covers 50 million square meters, and on average, you know, to put that into context of Europe, that's just 15% of the European footprint for industrial logistics. I mean, yeah, and this is covering in 17 markets. The largest market was obviously Poland, followed by the Czech Republic. Slovakia has again approximately just over around the 2 million square meter mark. Vacancy is quite low. We've seen demand generally been very stable and positive over the last 6 months as a number of things have changed. again, particularly with a focus on e-commerce, but also with other sorts of demand. But it's two-sided. There are pressures on the manufacturing and production sector and supply chains, and we'll talk about that in a little bit. But by and large, in some of most of the sort of mature markets, the vacancy in industrial logistics is less than 5%. Rents, depending on which country you're in, can range anywhere between sort of 2.9 to 5.5 euros a square meter per month. Largely speaking, again, land prices and delivery costs are plus minus, very similar. But of course, the sooner you get closer to the main sort of capital cities, the more expensive it will get. And obviously, the business model for logistics and offering it at these levels of rents gets challenged as land prices increase. And I'm sure Martin will talk about that shortly. Again, just sort of overarching trends, just to finish up. Again, as I said, leasing has been rather stable. Again, we've had some short-term leasing going on to satisfy short-term requirements as e-commerce has grown. Rents have remained largely stable. We've seen some increases in some locations where there is a limited amount of space available. E-commerce, we've heard a lot about e-commerce, being the driving force of demand, and that is partly the case, but not only. Not all parts of retail, of the retail sector have had positive results, but certainly it's in terms of groceries and certain sectors, we've seen significant increases. But in Central and Eastern Europe as a whole, the e-commerce sector, in terms of total retail sales, is still relatively low. Anywhere between 5% of retail sales in Poland, up to 15+% in the Czech Republic. We will see that growing, but we probably will see that stabilize a bit more. We've seen a rapid increase in that over the last six months or so, and that should, once COVID sort of normalizes, should tail off and become a bit more flatter. But it will grow. But on the other hand, retail is not entirely dead, but there's still a lot of work in that sector to a lot of structural change to happen. Nearshoring and supply chains, again, we'll talk about this in a little bit, but a lot of talk about the supply chains were broken globally. It was difficult at the beginning of COVID to get things were broken, factories were shut down. Largely that's corrected itself, but a second wave could drive us into further challenges. And again, governments and businesses may take the view that they would maybe move some of that production closer to Europe or closer to end consumers. And again, businesses of national interest will be closely looked at, particularly if governments and taxpayers' money has to bail those out. But again, doing reshoring or nearshoring production facilities is not a quick task. It takes, would take a number of years. So some of these changes will not be a quick fix. Again, not every company will survive the impacts of COVID. Some corporates, some owner occupiers, for example, in the market who might have production or other facilities, have already or are considering a sale and lease back to help raise operational capital to get them through some of this time. So this provides an additional opportunity for investors in some cases. And another area that we will talk about today is around the area of automation and innovation. Obviously, this is particularly of interest for certainly those of you who are studying technology. But there's been a lot of changes in this area, and I'm pleased that we've got a number of experts on our panel that can help shed some light on this for us. But both from a development point of view and an occupier point of view, there's numerous technologies that are being implemented to help drive efficiencies from either from a cost perspective or a supply chain and delivery time perspective. But also, these technologies, particularly in times where unemployment levels are so low, and it's very challenging to get hold of people. Some of these technologies will make, particularly the industrial and logistics sector, less reliant on certain locations, and again, sort of relieve some of those pressures through automating some parts of their production. And of course, data and data collection and other factors of that come into it quite considerably. So that's my short introduction, and now we're going to move over to our panel discussion, and I'm very happy to introduce our panelists. So we've got Martin Baláž from Prologis, and I'll ask these gentlemen to introduce themselves in a short while. Richard Urvay, who is our Managing Director of Colliers International in Slovakia. Paul Deverell from Future 2, who's also been living and working in the region for quite some time, and Michal Bodocky from DSV Solutions in Slovakia. So welcome, gentlemen.
Welcome.
So let's just kick off, and maybe we'll just have a quick, short introduction from each of you. So Martin, do you want to start off?
Yeah, why not? Hello, everybody. For those who do not know me, my name is Martin Baláž. I'm a country manager of Prologis in Czech Republic and Slovakia. Prologis is globally largest industrial developer and owner of logistics industrial properties in the world. In Czech Republic and Slovakia, we own more than 1.5 million square meters of industrial and warehouse space. And yeah, I must say I'm lucky that I'm in this sector in a COVID time, and in a while I will tell you why is that. Thank you.
Thank you, Martin. Richard.
Hello, everybody. Good morning. Just to introduce myself, my name is Richard Urvay. I am the Managing Director of the Slovakian branch of Colliers International. We are very proud to have the honor to be a partner of this webinar. And in Slovakia, just a short introduction. We have standard real estate department lines, which are operating the business across the country. We operate the business from Bratislava, but we have several on-site managers working across Slovakia. And I'm very pleased to have the talented and professional employees in our team.
Thank you, Richard. Paul?
Yeah, hi, good morning, everybody. I'm Paul Deverell from Future 2, and we are commercial building technology specialists, and we cover all aspects of real estate, so industrial, office, retail, and hotels, amongst other things. And we are regional company, so CEE based.
Thank you, Paul. Last but not least, Michal.
Yeah. So good morning also for me. So my name is Michal Bodocky. I'm working for DSV Solutions Slovakia. We are one of biggest logistic provider worldwide, and we operate more than almost 70,000 square meters in Slovakia. So we are bringing goods to the customer, providing servicing, storing with different areas of the business. So for sure.
Great. Thank you very much indeed, and thank you for spending your time with us today. So obviously we're here to talk about industrial logistics. We can't ignore COVID and what it's doing to the world. But again, I don't want to entirely focus our time on it, because life does go on, and we will move forward eventually. But yeah, maybe if I can talk about Martin. Martin, so Prologis, obviously, we're one of the world's largest developers and owners of logistics space, and also in Czech Republic and Slovakia. You've got probably a good 20% share of the Slovak market. What are the challenges for you at the moment, and what are your plans sort of going forward over the next couple of years?
Yeah, thank you, Kevin. I must say that our main focus in the last few years was mainly to increase our portfolio and get the market share in Slovakia. We have developed a lot of build-to-suit and speculative projects for our customers or new customers. For example, we developed Nitra Park next to JLR, where we developed 12 build-to-suit units for 12 production customers. And I think in the near future, the Slovak market will focus mainly on build-to-suit projects. I think we will see less and less speculative developments, or at least the next 6 to 9 months. It was one of our strategies to build spec units and leasing it, but with the COVID and after COVID situation, I think developers and us especially will focus mainly on build-to-suits. We do have a couple of build-to-suit projects under negotiations at this moment, and we still can deliver only on our land bank more than 200,000 square meters only in Slovakia. So I think there is a huge potential for further growth and to satisfy needs of our customers or new customers on the market.
Thank you. So moving on to Michal. Actually, I believe that Martin is your landlord, if I'm not mistaken.
Yeah, he is one of. He wants to be only one, but he's one of.
So, obviously he's a great landlord, I can imagine. But from your side of things, obviously you're a supply chain logistics company. Again, what changes have you seen, particularly over the last 6 months, from within your own organization, but also demand from your customers for your services?
So it was different from the market to market. Some of the markets were stable, some was growing, but for, we can say, shorter period, and then coming back to normal or drop. The most drop was in automotive business, and the most quicker drop, we can say, which now comes back and try to and working even, I can say, better than last year in the same time, you can say September, October. But situation is coming back, or I see it's maybe will be worse than in the first wave. With that in our region, it is COVID more stronger, and from yesterday also Slovakia is going to be not fully closed, but we are coming back on the we can say March, April activities. So normally to say that we can say that the business was not stopped during the last 6 months totally for each market. Mostly was really the issue in automotive, where automotive business have a lot of suppliers, and if one supplier is not working, they can stop complete production, because the substitution of many of producer is for automotive very hard and takes longer time. It is not like you can buy clothes from one company and then from another company and sell them. But if you have some components for the car, you cannot change it so easier. And for retailers were survive many times switched on e-commerce, and many times this each e-commerce business was so growing that they grow more than year before, also during some period of time. And dangerous goods market, we can say some drogery and so on, this was quite stable.
Okay, thank you, Michal. Paul, you've been involved in this sector for quite a number of years, both on the development side and more recently, in the last few years, you've been involved in the technology side. So, before COVID sort of came in, what maybe you can sort of comment on what particularly developers and sort of occupiers were sort of thinking about in terms of technology and some of the changes there, and also if COVID has sort of upset some of those plans, and is it changing the direction of what their thoughts around technology?
Yeah, well, it's a big one to answer in a few seconds because obviously, there have been several years of discussion about technology now. I think the positive thing is maybe just summarizing that tenants and landlords seem to be more aligned in their interests now, as where beforehand, when we started the discussion about, improving the technologies in buildings, it's very much, probably a one-sided story, really, mostly with tenants trying to, increase the performance of buildings and increase the level of technological innovation, and then obviously what comes into play, what has also changed is, I would say, the ease of discussion between both tenant and landlord, as well. The landlord is now more open to support tenant demands in terms of the technology and the standards in the buildings. And we're seeing, the standard building specifications that landlords are putting forth, being that much more advanced technologically than they were a few years ago. So we're seeing, the alignment there, and what we work on both sides of the equation. So we're either working on the landlord side, where, we're helping to understand the industry maybe a little bit, because there's a lot of jargon out there, a lot of buzzwords, IoT this and smart that, and we try to, sort of help filter out maybe some of that jargon and help to understand what really is important to implement. And I think a lot of landlords are looking to fairly high standards in the standard building specifications, certainly involving systems that are open platforms where it can cater to a huge amount of different tenant demands, be that high-tech manufacturing, automotive, or logistic operations. Obviously, as you mentioned, with more and more automation coming in, that also plays a role, so hand in hand. And so I think that the main thing is that we see another thing, let's say from a tenant side, is that we see tenants with their own internal standards now, their own internal specifications, which are then provided to landlords, and the landlord needs to be ready to support that. And obviously we're involved sometimes in the discussion between landlords and tenants. What should be classed as real estate, i.e. what should the landlord pay for, and what is classed as an extra, a non-real estate item, which is more tenant focused, tenant specific, and therefore perhaps higher risk for the landlord to invest in, because if the building becomes vacant, then, question is, what value does that bring to the next tenant? So I could ramble on a lot, and we've got, only a certain amount of time. So in a nutshell, that's sort of the changes we see. Going on a bit back to your COVID question, we're seeing, I think, more change in office and hotel and retail, more than industrial. But that's I think pretty obvious why.
Yeah, all right, thank you. And we'll pick up on a couple of those points in a minute, particularly around between the landlord and tenant and sort of who's paying for what. But Richard, just from the agent's perspective, and again, just a quick summary of what you've been seeing, on the market there in Slovakia in particular, and what sort of changes have taken foot, particularly in this particular sector.
Thank you, Kevin. Well, the overall impact on COVID on our business is not positive for sure. In real estate, obviously, a good benchmark how the business is doing is the transaction volume, which you mentioned earlier in your stage, and we could see a drop down, especially in Q2, Q3, pretty much to minimum levels. Most of the recorded deals were from Q1. That means that they've started in 2019, obviously, and those deals which haven't been closed until February were postponed or are delayed somehow. The investors are looking for value add opportunities, with some of the more aggressive ones are hoping obviously for a price drop. Good signal for the panelists is that we see some positive traction towards industrial sector. That means that some of the large investors who didn't look at the industrial segment before are focusing on the industrial sides, especially in the logistics sector, and this is then transformed to the potential yield compressions which the industrial sector can see in some of the markets. Some of the sectors, as you mentioned earlier, were hit more, obviously retail, accommodation, leisure, where the segments where COVID impact was enormous and huge, especially in the markets where the overall saturation rate was already too high. For example, in Slovakia, the retail sector was oversaturated in terms of retail space per capita. So that was another hit to the obvious little bit deformed market. So some of the sectors are still doing fine. Here I would like to separate between the agencies and the consultancy services we provide. Obviously in the agency sector, where there is no viewing, where there is no possibility to take a look at the premises, at the building, it's very tough to continue on a deal.
Okay, thank you. Martin, I mean, Paul mentioned it, touched on it earlier around the changes. So in terms of technically speaking, in terms of big boxes or sheds, as they're more commonly called, they're obviously relatively simple structures. But what changes in the sort of the building process have you seen in the last couple of years? I mean, in terms of, are they getting taller? We've obviously had a multi-level. Floor loading capacities and all these kind of things. But what other sort of technologies have you been seeing, not just obviously in this region, but further afield?
Yeah, I mean, it looks pretty simple. That's true. However, the changes are quite significant, and I'm sure we will see much more changes in coming future with the growing e-commerce portion in our industry. I would split it to different levels. First level is a sustainability approach of developers, and we have a big focus on that element. Few years ago, it might have been more about marketing. Today is about the strategy and about willingness of companies like Prologis to invest to these solutions. I would say BREEAM certificates became pretty standard, and now it's you can see even a fight between developers who achieves higher BREEAM certificates. This cost, of course, a lot of money in the building. This helps, of course, to the environment and to our customers as well. For example, we built in Prague 2 buildings that achieved BREEAM outstanding certificates like 3 years ago. Last year, one of our competitors achieved the same, even with higher scoring on this BREEAM certification. So, I mean, there is this, fight in the background and improving the sustainability of our buildings. Then a big focus is on well-being of customers. The word well-being 3 years ago was mainly in office sector. Today is pronounced on daily basis in industrial sector as well. And we do have customers who invest themselves hundreds of thousands of euros in the buildings just to improve working environment of their employees. They invest a lot of money to brand furniture, to make much nicer social areas, to build gyms, you know, within their logistics office space. And there are different features that we didn't see like 5 years ago, and today is becoming pretty standard. So well-being of customer, of employees, of our customers is one of key focuses. Then another level, I would say, is a clear height of the buildings and floor quality of the buildings. Unfortunately, in Slovakia and Czech Republic, the master plans and zoning plans do not allow to build high bay warehouses. In majority of locations, you can develop maximum like 14-15 meters height of the buildings. Many cities allow you to build maximum 12 meters buildings, while, for example, in UK, it's pretty standard to build 18-20 meters high buildings. That's a huge difference on a square meter of efficiency of warehousing. And this must change, and it will be changing, but the change will be very slow, I would say. And floor quality, as Paul was saying, the automatization of logistics processes is getting quite sophisticated, and there is a much bigger focus on that. Of course, there will be much higher focus on quality and flatness of the floor. That's we are already implementing, but some customers require even much higher flatness of the floor. That costs, of course, a lot of money, and you can do this in a build-to-suit premises on customer request. Two more points. LED lighting is now pretty much standard, but it's not LED lighting and LED lighting. What we are trying to do from now on is to install smart LED lighting. In our development, it will be pretty standard to have daylight sensors, moving sensors, and other sensors in the light fitting that allows you to like set every lighting differently, to switch it on, switch it off, and to decrease the cost of operation of the building significantly by this. And what is another? And I mean, in Prologis, we are trying to really, focus on that. And in US, we opened, we call it Prologis Lab. It's a warehouse space that we are providing to startup companies working in logistics or industrial like startup projects, robotization and this kind of testing of drones. And we are providing the space to these startup companies to test these new technologies and to see the real impact in the operation and to see the real impact on our buildings in future. So I'm sure these kind of new technologies will have some impact on our development as well in future.
Thank you. So moving on to Michal again. You're occupying these types of spaces, and you're running logistics operations all over the world. What kind of technologies have you implemented, or you seen been implemented in your own facilities over the years? I mean, obviously these are expensive changes to make, but can you give us an example of the sort of things that you're looking into currently?
So we are also looking still much more of automatization, because people and good people are not enough still. Anyhow, for us, it is quite many times quite harder because we are not, we can say, the owner of the business, but we are doing the services for someone. So to invest to automatization, it must be, we can say, long-term business, because it's cost, and the investment is many times not going back in 1 to 3 years anyhow, but it's for much longer period. But also automatization not suits to everyone or every company. So we must think too much in advance if we will invest to automatization, and for how big automatization I can say. Anyhow, we are many times using quite normal warehouses with no special requirements for our clients. As also we can say here in Slovakia, the businesses or there's some tender you to sign a contract for more than 3 years is more miracle than usuality. Usually it's just a few years. But to be better from another competitors on the market, really we must be more safe, productive, cheaper anyhow, and it is only the possible that we will do something different from others. So also we are trying to look for example for the warehouses which are higher, to put more goods in the warehouse. We want that the quality of the floor will be better, that we can use raw LS, put there some system trucks inside, and to be quicker on us to put more goods inside. Work on the cost, LED lights, we can say it's for us, it's a standard that we will require. If there is also possible to look as much as possible areas of the using of the rights. If it's automatic, it's much better. Also, so we are looking for cost also for the heating, because also this is the part. So better walls, maybe better closing of the warehouse. It's what we are looking for. And on terms of automatization, so this is more about than the still maybe the automotive forklifts, AGVs, to moving goods from one point to another, where we don't need to use the people, and we can program them for different manipulation with the goods.
All right, thank you. And we'll come. Well, maybe just before one additional thing. Martin had mentioned it, but in DSV, what kind of changes have you seen in terms of that environmental piece, and also the wellness and health and safety of your employees? Have you made some changes there generally, but or recently as an impact of COVID, or Michael?
So. For environmental or the aspects we are trying long term to have a better environment for our staff. So really nice, so that they have nice, we can say working environment around them. About the safety, health and safety, COVID helps lots of. We must say, because we protect other people much more. Sometimes or sometimes usually we protect them also internally, that they cannot we still have smaller groups of the people working together. So we are separating people, separating shifts. We don't want, if something will happen, that we will need to close complete warehouse and complete stuff. So still have possibility that if something will happen in one group, they are not in contact with some other group, that we will not stop the business. So our people are getting lots of possibility of disinfection. We clean warehouses, offices also before, but it's more frequently. We are trying to we spray on the offices, on the forklifts, some special disinfection which is supposed to work some weeks. So we try to follow the business without to be disturbed of the COVID.
Okay, thank you. Thanks very much, Paul. So you know, so obviously we've heard from developers' point of view and an occupier's point of view. A lot of their, you know, particularly when we're looking at the environmental aspects and technological aspects. A lot of this has to do with energy. You know, electricity. As we become more automated, we need a lot more electricity and sources for that. What have you been seeing in recent times, you know, in this particular area, and how are the changes being made to improve usage and efficiencies in this area?
Yeah, so I think first point is data. You know, a lot of people still say, why do we need data? I think it's less and less. I remember when the big data story came out, and obviously it was a big marketing push and a lot of discussion about it. And I think back then it wasn't so clear what to do with all that data, because obviously having data is great, but unless you have some way to interpret that data and preferably make improvements, it's pretty useless. And I would agree with that. So, you know, obviously where we, you know, firstly, I think monitoring and measuring consumption. So obviously many of the buildings these days are delivered with smart meters, which connect directly to some type of software. And the older buildings we are seeing are, you know, being retrofitted with smarter meters, but you can also connect to, let's say, non-smart meters, so older type of meters. So I think that's the very base of it. And, you know, we could probably talk for an hour about that, but, you know, I think that the most important thing is, as I mentioned before, you know, interests are aligned. And it also, of course, depends on the operation. You know, if you're talking about a heavy automotive type production, then you're talking about, you know, megawatts of energy. I go in warehouses where, you know, maybe some heating, maybe some lighting, but, you know, the opposite end of that, which are very simple buildings, where then, you know, simple operations, where then, you know, there isn't maybe so much emphasis placed on energy. Having said that, you know, another part of this, of course, is the reporting aspect of you know, buildings, not only from a landlord's perspective, but also from a tenant's perspective. So the internal reporting standards, you know, be it sort of to adhere to corporate sustainability goals, or whether it's some type of ESG reporting standard for public and for private companies. You know, this data has to come from somewhere. And yes, BREEAM, of course, and WELL are a feature in becoming more so, which is only a positive thing, certainly in terms of energy consumption and energy monitoring and management, and actually, you know, also from a moral perspective for all of us, not only from a dollars and cents perspective, but of course, you know, in order to report, because obviously once you have a BREEAM rating, or you're you know, obligated to report your ESG standards, to shareholders or to the market, that data needs to come from somewhere, and you can't just pluck that data out of the sky. You can't send, utility invoices to cover that. It needs to be accurate, and it needs to be reported as an obligation. It's obligatory to report that data over time, and the data therefore has to come from somewhere. And of course, for best practice, obviously having information about various different types of operations. I mean, DSV obviously has multiple operations, and you obviously will benchmark against different operations in different countries, and it can be as simple as we saw an example where the tenant wanted to change the external lighting around the periphery of the building to LEDs. And they actually had already an energy monitoring system in place. And they were easily able to see, okay, what was the difference in our consumption or the consumption of that lighting before and after the investment? What does that mean in terms of return on investment? And then that can justify making additional investments at other branches or other locations. So trying to compact a lot of stuff into just a very few words, but yeah, that's more or less.
Thanks, Paul. That's very interesting. And again, I mean, it brings me onto the topic. Again, perhaps again, anybody who wants to answer this really is about that return on investment. Obviously, investing into these technologies is expensive. From one side, as delivering the building that's capable of running those investments, but also the requirements that come from the occupiers. So who ends up paying for this, and how do we get that money? How does that money sort of get
May I just cut in just a second? I know it's not my turn, but sorry, but this is one thing that really is a main point that you mentioned there, Kevin. These things are expensive. We don't need this. When we work we're consultants. So what we do is, one of our jobs is, we don't sell anything. We don't need to sell. We don't sell lights. We don't sell BMS. We don't sell software. We consult on it. So it's not in our interest to tell a client, look, this is expensive or cheap. But the systems now, and let's say hardware and software, by hardware I mean, let's say an air handling unit or s.r.o's, heaters in the building, dock doors with connectivity, with an interface where it can be connected to some type of software. This is standard delivery now. This is not a question of, oh, it's more expensive than a system without some type of connection possibility to a software. This is becoming standard. We see it also with elevators, with all type of HVAC units, HVAC, heating, ventilation, and air conditioning, you name it. That is pretty much a standard delivery now. Where implementing and retrofitting a building, which is, I think, also what you're touching on there as well. If you understand what the benefits are and make sure that you have a sound plan in place for those implementations and an ROI calculation, you can know upfront what the benefits are for you. And there are, if we take BMS, I think a lot of landlords are afraid of those three letters. Maybe not so much in industrial, but maybe in other sectors of our market, because it means a lot of zeros behind a number, and what benefit does it bring me? However, now you've got very innovative companies that are providing a simple type, I would say it in an easy way, a simple type BMS, where you benefit from a lot of the control, monitoring, optimization that you would from a, let's say, high-end BMS system, but without all the deep programming needed, without all the commissioning needed, the complex commissioning needed. It can be set up, and certainly for industrial buildings, that's the case. So sorry jumping in there, but I think it's something really important that we hear all the time. And it's expensive, but surely that needs justification with an ROI calculation and savings on efficiency, and somebody needs to do that.
Yeah, no, thanks, Paul. Thanks for clarifying that. So, Martin, again, you're seeing occupiers come to you with increased demands from a technological standpoint for your buildings. Again, so in relevance to what Paul said, how do you view that, and in terms of, again, covering those additional, let's say, costs or requirements, or upgrades, let's say, to sort of standard delivery? How does that work from your side?
I mean, it's very different from market to market. I mean, there are markets that are highly competitive, and it comes back to rental price. I mean, if the market is very highly competitive and the rents are pushed down, then your space to invest to the building some extra money is very limited. However, on markets where we see like greater rent growth and the space for investing and finding solutions to give back. I mean, because in many cases this is like giving back to society. I mean the investments like solar panels and this kind of investments, I mean, the investment will not pay back in 2-3 years. I mean, in some cases it's 7 and 10 years or even more. So this is for the cost of a development company that's and their own initiative. So we developed one building in Senec, in our Senec park, with solar system and batteries. But I mean, we were not able to achieve even even 1% higher rent than on a standard building. While, for example, in other markets like maybe Prague or other markets, maybe Germany, we would be able to get higher rent for this kind of space. So it's different from market to market, but I think by a push from development companies and from companies like, for example, DSV, that's even their own initiative to increase the sustainability of their operations and to as well push us to increase sustainability of our buildings, we will get there. But it's expensive and it's very difficult to pay that money just to have it. So yeah. I mean, the return on investment is really long, and it must be two parties that are willing to take that cost.
No, absolutely. And yeah, so Richard, I mean, from an agent's perspective, again, how have you seen the market develop from that perspective? Can you give us a comment on that?
Yeah. Well, I fully agree with Martin. It's strongly linked with the demand. It's case by case, country by country. If there is a country with strong, where is a strong tenants market, obviously the pressure from the tenants will be higher, and the developer has to match it up. So what we will see in the future, and it's not only within the industrial sector, especially in the office sector, as is that we will see and larger pressure on having more flexibility in the lease terms and in the conditions that are provided from the landlords. Obviously, it's a circle again. Then the developers have to be up to date and have to ask for more securities, which are required by the banks on the other hand. But especially, I would say, in the office sector, where there is a large pressure on decreasing, let's say, the premises and the volumes of lease space, the next requirement will be a larger demand of flexibility on the lease terms, as I said. So this is what's going to be happening in the future in several markets across the region, I would say.
Great, thank you. So, Michal, just and again a quick question for you. In terms of supply chains, I mean, I said you Obviously you've seen that particularly in automotive. I wanted to bring up automotive because it's such a strong sector in Slovakia. What concerns do you have for that sector in Slovakia, and are there any, and which sectors, from your point of view, are either under pressure or are doing very well?
So in terms of supply chain, so there was during the first wave of the COVID, and also there was not the big issue of we can say about the transport. Still, the capacity was quite big, but it was blocked slightly. The deliveries were longer because of blocking some borders, longer queues on the borders, and this was for all sectors, we can say. Issue of automotive was that the production in many countries, or the suppliers, or for example for Slovakia, were not able to deliver pieces on time up to request of the production. First it was China. After China, it was immediately Italy, Spain, France, and these countries. And even automotive producer were firstly thinking just about the 1 maximum 2 weeks of stopping. The production was stopped much more longer, and it was just because they really want to start and follow with production. So they work to fix all their customers, all the suppliers, to be able to have the goods up to their demand and work. Because it was more expensive to work just for produce few cars than long for full production for all of them. So and for automotive it was the longest time to proceed. For example, we have also the drugstore markets, where for these goods there was big demand from the beginning of March and April. We have here a client in Slovakia with 13,000 square meters where we operate and delivering for 13 different countries in Europe. And we grow up immediately, we can say, from 2 shifts work, and orders grows up to 3 shifts, even 4 shifts. But then after another 2 weeks, we drop down to just for 1 shift. Issue was that also the producer were not able to produce all this material. And if they produce, they then focus more on the Western market. So more they focus on the markets there is bigger or stronger, and Central, we can say Europe, was dropping down on maybe almost 20% of normal quantities we have in warehouse, and we are able to then deliver. So definitely this was really changing. What was not blocked, there was food business. This one was working, even was growing for first month. So for the companies like them that try to produce as much as possible, orders were growing because the shops needs to be full. So this business, so it's stable or growing all the time.
So going into this second wave, we shouldn't necessarily need to run out and buy stacks of toilet paper and pasta as we did in the first round.
Yeah.
So in brief, so going into the second wave, you think we're in a better. We've learned our lesson from March time, and hopefully come more organized.
Yeah, we again thinking that first we will have an issue can be automotive. Especially here in Slovakia, we have a situation that the testing for the COVID will start today for all the Slovakia, which can bring to us that thousands or 10,000s of people will be blocked, and we will have lockdown not coming that states will representative states will make the lockdown, but through this testing phase we will lock down ourselves.
Yeah. Okay. No, thank you for that. Thank you for that. Yeah. Let's hope it isn't. So let's say the worst case scenario in that sense, because I think shutdown in particularly in that sector again across the region would be very challenging. Just before we sort of continue, just I would like to say to everybody listening in, obviously there's a Q&A function on this panel. If you would like to add a question, use the Q&A section, please. So moving on to back to Martin, Prologis, again, being one of the largest developers in this region, you do a lot of your own research. You've got your own laboratory there in the US, but you also do a lot of you also collect a lot of data and insights from your parks and from your clients and partners. What are some of the highlights that you've seen recently, and what are some of the more interesting ones that have come out of that?
Yeah. I personally like research and statistics, so I have a few numbers. What's the lesson learned from the whole situation from March until now is that we have learned to work with the stay-at-home economy, and this has a big impact on the market, and it will have a huge impact on the industrial market. There are three main categories of this impact. I mean, there is a growth of e-commerce. That's I mean, in general, e-commerce needs approximately 3 times more logistic space than a standard brick and mortar retailer. Then higher inventories. Companies will prefer avoiding situation that was in March this year, that they were not able to supply their customers and end users. So they will be increasing, and they are already increasing inventories in their warehouses. And then third main huge impact or influence is the growth of outsourcing. And that's where it's coming back to the new businesses for companies like DSV, where they will see much higher demand coming from retailers and e-commerce companies and production companies. When we look at some statistics, when we were doing this research and when we were calculating this, if the e-commerce grows only by 1%, on the penetration in Europe, it will bring a new demand of approximately 2 million square meters only in Europe. And we see this penetration is increasing significantly, and since March this year, it has even speed up the process of penetration of e-commerce. When we compare it to US, for example, every 1% of e-commerce penetration will bring more than 4 million square meters of a new warehouse space demand. So the US market and the consumption market in US is much higher than in Europe. So that's why there is this difference. And when we are coming to inventories, here I have numbers only from US, but if companies increase their inventories only by 5 to 10%, it will only in US it will bring a new demand of approximately 28 million square meters. So it might be similar in Europe, but coming back to that, to the main point, if if the e-commerce and inventories percentage increases really that significantly, as we have seen it in couple of last months, I mean, there will be every year a new demand for several millions of square meters in Europe, that's on top of standard demand that we have seen until now. So there will be big pressure on development companies to satisfy these needs of our customers. Yeah, so that's where the main I mean, statistics and research points. No, that's the reason why I'm glad I'm in this sector at this moment.
Yeah, no. So the future's pretty bright, I think, for that. And yeah, no, it's been fascinating looking at some of your research, and again looking at how much of the world's goods flow through Prologis warehouses alone. So no, very interesting. You mentioned about the stay-home economy, and you know, Richard, as a business leader there in Slovakia, you know, how's that been for you, trying to run a business, you know, remotely? How has that been treating you?
Well, stepping into tough times or in the crisis, you have to adjust your strategy and you have to evaluate the risk a little bit more carefully than in normal times, I would say. So you obviously cannot foresee and control your income because it's just dependent on many variables and factors. What you can do is a little bit more focus on the level of costs and the areas you would like to adjust in terms of cost cutting. So a big portion of the, let's say, cost cutting is then a proper communication within the team, within the company, within the structure. Obviously, none of the leaders would like to focus on that because we are focused on development. We are focused on bringing new business in to meet as many clients as possible, and obviously to avoid the cost cutting. But in terms of crisis, you have to adjust that. So the new situation requires new action and new leadership approach as well. So I'm very happy how we as a company handled to switch to remote rapidly, very fast. So we've been able really from one day to another work from home, thanks to our excellent, I would say, IT department. And for me, running as an agency, obviously some of the sectors is happening, or the business is happening outside of the office. So in normal cases, I don't want the agents to be seen in the office. They should be on the viewings. They should be outside on the market, looking for the best opportunities for the landlords and for the tenants. Obviously, the other stuff has to be on place, but with very good and necessary communication in order to avoid any miscommunication within the group. So every new situation is requesting an new approach, and this is, I think, happening in all of the sectors. There are, as you know, we've done several surveys and advisory reports advising our clients, back to office reports, and obviously short-term solution, having people in home office is fine, but definitely home office is not a long-term solution for most of the sectors, I would say. It's clear that some of the people would like to work from home, which the survey said that at least 1-2 times a week. But for some companies in some sectors with junior level of people where they need some support, they need a leadership, it's necessary to come back to the office one time, and hopefully this will be the long-term solution to avoid home office in a bigger way, if I would say.
Yeah, no, absolutely. Yeah, I mean, obviously, you know, for the administrative, let's say administrative sector, or for those people who work in offices, yeah, you know, that's an option. But for those who build cars and ship goods, you know, doing that from home is obviously not. It's quite a challenge. So, we're getting close to the end now, and again, just want to, there's a couple of other points, and I know we're jumping around topics, but everyone's got, you know, different specialities on this call. But Paul, I wanted to ask you again, just sort of, I know this is a really challenging question, and it's so varied because obviously there's a lot of technology involved. But you know, we've got an audience that is obviously interested in this technology topic. Around equipment and you know, how often, you know, equipment needs to be replaced. You know, what are the sort of typical return on investment sort of periods, and what sort of efficiencies have we sort of seen in some of those equipment types, particularly on the HVAC side, from your experience recently?
Definitely. And one thing, if I may just step back, one thing which I forgot to mention when you asked the question previously about energy. Now, obviously, it's in the tenant's interest generally to optimize their energy costs and energy consumption. And as we always talk about, I think in industrial, there's now more of a total cost of occupancy calculation done by tenants. So they're not only taking into account the rent and service charges, but also utilities and potentially the you know, efficiency of the building. And obviously then if you have data, you can take that information and negotiate with suppliers, energy suppliers. So we see a lot of, you know, invoices from tenants where, you know, we say, were you aware that you're being, you know, you're paying penalties for that? You're paying, you know, out of you because your reserve energy capacity hasn't been calculated correctly. So therefore you're actually paying a higher energy tariff than you should be, you know. Do you need that equipment running at a peak tariff period during the day, or could it be switched off? Or, you know, that all is connected to the energy, you know, question. And significant savings can be made that way. So going forward a step, what obviously with regards to equipment and equipment lifespans, and of course there are guidelines which govern that. And in the UK we have the CEE guidelines. In the US they have s.r.o, of course for the ventilation and air conditioning. And I think, you know, generally speaking, there are rules of thumb with regards to age of equipment. But again, technology can help with that, because if you're able to monitor for it, I'll take a very simple example, because there are myriad examples that we could go through. All equipment in the building space, it can be monitored and managed. You know, take a dock door, for example, that should maybe have 40,000 movements before it has a revision. Who's counting those movements? I don't think anyone would probably stand there on a warehouse floor counting how many times up and down the door goes. And obviously, you know, technology, and if the door is connected, some type of software, you can see, you know, the movements there. And again, dock doors with many of we're seeing with a mini UPS, you know, so a mini backup electricity in case, you know, something happens to the main system in the building. You know, what's monitoring the UPS energy level itself. So there's no good having a backup if you know, the backup itself doesn't have energy at the time it needs it. So, but with regards, really trying not to get off topic too much, your question was mostly related to when equipment needs updating. Now, it's very hard to tell that over and above just using the standard rule of thumb documents from whatever authority that you choose to use it from, be it CEE or s.r.o or whatever kind of guide you use. So obviously, if that equipment is linked to a software, you can see the degradation over time of that equipment. You can also schedule revisions and maintenance much more accurately. Rather than just relying on some type of Excel sheet where, you know, a supplier should come in and maybe revise or check an item. And of course, all of that can be automated. And you know, if you then see, you know, issues with an asset, as we call them, you know, any type of equipment, could be air handling units, could be heating system, could be boilers, you know, then you're able to either preempt that, you know, potential. There's a lot of talk about preventative maintenance, and we hear that a lot. So this also touches on your question, because if you're able to monitor what's going on with this equipment, you're far more able to make that decision of when something needs maintenance, when something needs changing. And, you know, we're involved in a lot of projects where, also for offices, where we do a calculation at the current status of the operating standards of the equipment versus a replacement equipment. And then you have an easy ROI calculation. Plus, of course, you calculate your savings in electricity and also your CO2 load that you're saving. So all of these play into the decision of when to replace something, how often has it been maintained, you know, and of course, there is always a lovely discussion sometimes between landlords and tenants, who is responsible for maintenance and revisions. Was it carried out? You know, because often tenants think the landlord's responsible, where the landlord is not. And therefore, if you have data, you know, which you can, historical data where you can see if an asset was properly maintained according to the obligations in the lease contract, then you know, it's an easier discussion also who should remedy it, and you know, to keep obviously these systems in optimum at an optimum operating level. So sorry for bouncing around a bit, but it may not, you know, but we've got a short amount of time, so I'm trying to.
No, I understand. I think you mentioned it before that, you know, even, you know, you've been surprised, you know, at the sort of the very basic levels of recording that some companies are keeping in relation to these revisions and so on.
Sorry,
so
the basic level of
the recording of when revisions have been done.
I mean, yes, it's something that again, as with all these things, can be automated, you know, and it should be a couple of clicks to find out, you know, when a system or when a component of that system was last checked, who checked it, you know, was it replaced? And also, you know, with more and more manufacturers, I mean suppliers. So suppliers of HVAC, for example, let's stick on that. You know, they deliver the product with a connectivity to a connection possibility to a software. Somebody needs to connect that to the software, and then obviously they are also able to monitor it from their let's say offices. So if there's a fault that's flagged up, they see it. And then, you know, they may then what the question needs to be is to the landlord, should we change it or not? And the landlord then needs to decide, or the tenant needs to decide, okay, does it really need changing? And make a decision. But you need information, you need data, and it's surprising to us how much is still done on Excel. You know, big office parks, you know, people still reading meters, you know, 2 or 3 days per month running around reading meter data, you know, where all of that can be automated. And obviously there are errors. You know, I'm not saying computers are infallible, but they make far less errors than humans. And usually the error the computer makes is because the programmer didn't do the job properly. So, you know, it's all doable. It's becoming cheaper and cheaper to do this. We expect it to more or less, many of these things, not all these things, because not all these things have value to all landlords and tenants. Absolutely clear, definitely not what I'm saying. But what we're expecting is with all technologies, if we look at LED lights 15 years ago, I remember the discussion about LED lights. I think it was maybe 10, 15 years ago, the time flies. But it was also a discussion similar. Okay, that's very expensive. You know, what's the ROI? Why should we do this? You know, And now LED lights is a no-brainer. And I think we all probably admit that. So this is, I think, where we're at with a lot of the technologies which we are involved with, also BMS, energy monitoring systems, and that I think that's where we are a little bit at with that today. Although it definitely is, you know, becoming more sort of, dare I say, mainstream.
Yeah. All right. No, thank you very much. I think we're getting close to the end. We're getting close to the end, and maybe we just have a quick run around and ask each of the panelists just any sort of closing remarks, and before I sort of summarize. So Richard, just very briefly, what sort of opportunities do you see coming up in the next 6-12 months, provided that COVID starts to disappear into next year?
Well, obviously, every crisis brings possibilities as well, but I'm afraid that we will still see some COVID impact in the first half of the year of 2021. And it very depends on the vaccine timing, I would say, and then there will be time for additional opportunities. Thanks God, they are here. They will be here, especially in the logistics sector. As the panelists were mentioning, we are seeing more and more demand on e-commerce sector and short-term solutions. So this is definitely a sector that will be hopefully profiting from the crisis as well, as there is a bigger demand than it was in the past. So this is definitely the sector that should be watched closely.
Thank you. Michal, any closing statement on you? How do you see the short to mid-term future in the logistics industry?
So decisions are coming very hard for our clients, just because they cannot predict the market very easy. So I think that the shorter solutions will be more requested. Shorter, we can say, few months solutions for the client, which we are receiving. I can say also right now much often. And for us, it is very important to be prepared and to stay safe for providing our services for the clients, to be still able operationally manage all their requests. So this is our priority this time.
Thank you, Michal. And Martin, and for you, I mean, obviously it is you've already mentioned how positive it can be.
I will try to be a bit more positive. I mean, Slovakia has a big advantage comparing to Czech Republic and other markets, and it's land availability. I mean, in Slovakia, there is still a lot of land available that can be developed on industrial sector. While, for example, in Czech Republic or Germany, the land scarcity is enormous, and in Slovakia, you can still develop big industrial parks and big logistics zones, while in other countries it's almost impossible, except of some exceptions in some regional locations. So, I mean, if all of us on the market do our jobs properly, I think there is a big chance to bring good investors, good new companies to our market, and to use this potential that in Slovakia is still a huge opportunity to develop much more than exists at this moment.
Great, thank you. So, thank you, gentlemen, for taking part in the session this morning, and hopefully for those of you who are listening in, you found that useful. And again, we've tried to bring together a range of expertise, and as I said, I think hopefully from that you understand that this sector in particular has some challenges, but plenty of opportunities. There's certainly for us in the real estate advisory business, one of the sectors that has been one of the more positive stories so far this year, and looks to have a very bright future. As Paul mentioned, a lot of that will be supported by technology and innovations, not only in the industrial logistics sector, but for the real estate industry as a whole. I mean, obviously there are, you know, differences from country to country. We can see that in the challenges from labor, from physical locations like land, and of course, you know, currently, you know, some restrictions around movement. You know, and again, running a business and logistics, you know, again, it is very, very complex, particularly when you put all of these factors together. So, so no, again, thank you for all of those insights, gentlemen. And I think we're handing over now to Andrej, who will just, I think we're handing over to Andrej, who will just give us a closing statement, I think.
Dear Daniela, Ingrid, and Kevin, and dear panelists, I would like to thank you for bringing your expertise and experience and engaging in such fruitful, constructive, and open exchanges throughout this morning session. And dear participants, thank you for being here. We really appreciate that you took the time to be here in the morning, and we believe that you will join us for the afternoon session with the topic sustainable development factors and barriers in the real estate market. We are starting after the break at 11:30, and please don't forget you need to join the second link. Thank you so much.
Thank you.
Bye-bye.
Thank you for the opportunity.
Thank
Thanks.
you.
Bye.
Thank you very
Bye.
much. Bye.